And this is the Checkpoints, hosted and co-authored by Elena Kvantjilashvili and myself. I'm Georgi Sakadze. We are here to tell you about business and economics.
10 p.m. sharp from the Forbes Georgia studio. A lot has happened this week in Georgia, and I think, Georgi, a quote from Levan Karalashvili, a businessman, sums it up very well. Yesterday, we approached the Prime Minister, 10 business associations, with our proposals on how to open up the economy quicker, and today we have no Prime Minister. Georgi Gakharia has resigned on the background of quite tough economic and political instability in Georgia.
Yes, Elena, instability is really high in all regards. What we know is that Irakli Garibashvili, who was once dismissed by the ruling party, is now the only candidate of the same party for the vacant post of the Prime Minister of Georgia. The pace that the ruling party chose for presenting the new Prime Minister and the government to the Parliament for approval was very swift, to say the least. On Friday, Parliament had all the candidates and the program already presented. It is hard to say at this moment whether or not these changes have a positive impact on the uncertainty, both it's political, it's on political and on economic levels as well.
Meanwhile, one of the downside risks that the Fitch Ratings had identified as part of the Georgia's BB rating with a negative outlook has materialized, and of course this political tension needs to be neutralized in order for the government to have time to focus on the most important issue, and that is the pandemic and its effect. We have already seen the price of lockdown in new figures from Geostat. For the fourth quarter of 2020, 79,000 less employed, 53,000 more unemployed, 26,000 who left beyond the workforce. This drain mostly stemming from wage workers, which is the price we have paid for one of the strictest lockdowns globally.
Yes, and we will focus on that with the exclusive interview, of course. Who did you talk at Fitch Ratings? Finally.
Yeung, Associate Director at Fitch Ratings, sat down with the Checkpoints in this exclusive interview to assess the current situation in Georgia and once again provide recommendations on how to improve the rating and general business environment in Georgia. Let us explain what this rating means for the investors, for Georgia and for the investors.
The affirmation of Georgia's BB rating very much reflects our view that even against the negative shock of the COVID pandemic, we do assess the overall policy response by the authorities, that is the monetary response, the fiscal response, as credible and important, supporting Georgia at the BB rating level. Now, this mix of credible policy response and overall framework has proven to support Georgia's resilience even in past external shocks. However, I do think it's important to also stress that even though we affirm the rating of Georgia at BB, the outlook on the rating is still negative. It very much emphasizes that even though Georgia has so far navigated through this challenging pandemic, there are increasing vulnerabilities in the rating. The shock of the pandemic is, of course, ongoing, and we expect Georgia to experience only a modest economic recovery this year, so around 4.3%. The downside risks are certainly still very high. There are uncertainties with regards to the vaccination rollout and also increased uncertainty still on international tourism.
You mentioned 2 points. One is the vaccination rollout, and the other is how tourism performs. What are some of the policy recommendations that Fitch Rating might have for Georgia to mitigate these downside risks?
The downside risks themselves are very difficult to target with specific policy measures. I mean, the pandemic, the coronavirus is always evolving, and international border restrictions are always evolving as well. But what I can mention is that the overall policy response in terms of the the fiscal and the monetary measures that have been put in place, as I mentioned earlier, have been supportive of the rating. And when we had revised Georgia's outlook to negative last year in April, we recognized the significant challenges this pandemic would have on government fiscal finances, on financial stability, and on growth, particularly in the tourism sector. Yes, the government fiscal finances have deteriorated. We have a much wider fiscal deficit. We have a much higher government debt level. However, the overall fiscal response that the government has done has generally been well targeted. It's been quite varied in supporting businesses and also individuals. It has also been adjusted to support the informal sector, which is quite large in Georgia. It can also be said that the ongoing dialogue with the IMF has helped maintain some degree of fiscal discipline in fiscal spending, whilst balancing the need for fiscal stimulus for the economy. The response from the National Bank of Georgia has also been highly appropriate in our view, a mix of prudential measures and also interventions in foreign exchange market to help support financial stability and also smooth exchange rate volatility despite the increased uncertainties facing the economy relative to other countries in the region, and particularly for other sovereigns also rated at the BB category, is the significant donor response that Georgia benefited from to meet its increasing financing needs. This amounted to almost 14% of GDP last year, and more than enough to help meet financing needs and spending for this year.
Another risk that you haven't mentioned here, but we can read it in the report, is risk of political instability. And now the events have unfolded in Georgia. Our prime minister has resigned. There is quite big political tension. What we will have a new government. What impact could this have on the rating?
Political instability is something that we already recognized for Georgia's rating. I think it's been seen certainly in the past that domestic politics can also impact volatility of the exchange rate. It's something that, whilst is structurally there, it's ongoing. It hasn't proven to be a distraction to implementing necessary reform and necessary policy making. I think we certainly saw that last year. The government, despite some volatility surrounding the parliamentary elections, the government was still able to implement its fiscal measures to support the economy. At the same time, it continued to follow and continue having dialogue with the IMF, and that's also very important. And I think when you compare Georgia also to the region, political instability is not a standout, perhaps, for weakness. Georgia's governance indicators, certainly when you compare it to the median kind of BB category, is still seen as significantly better. So whilst we do have this current uncertainties in the political environment with recent developments, we don't see it as an immediate risk to the policy response that we expect will remain supportive of the economy and supporting the Georgian economy towards economic recovery this year.
For a last question, so to say, before we sum up, Georgia is one of the countries in the world, in top 10 countries, so to say, which has the strictest lockdowns and strictest measures, which has its price, of course. And we've seen Georgia's economy contracting by 6.1%, which is more than what outlooks were telling us. What role does opening of the economy play in the rating, and how Georgia will be evaluated in future?
Yes, the lockdown restrictions were strict. And it's something that certainly has constrained economic growth. Opening up of the economy and easing national restrictions will certainly help improve private consumption trends and also investment opportunities, and also just to get the business environment also moving forward. The uncertainty is not just on Georgia's own national restrictions, but also the travel restrictions of its key partners, particularly in the tourism sector. We all know that tourism plays a very important role in Georgia's economy, almost directly 14 to 16% of GDP. So certainly the main challenges for Georgia for this year is the development in the tourism sector. Now, our assumption that we have for the tourism sector is that we expect only a 30% recovery of 2019 tourism levels for this year, and then 80% the next year. And we don't expect tourism to fully recover in Georgia, certainly not until 2023. The longer a sector is impacted by a lockdown, the longer there are structural issues that may come about, certainly perhaps in the labor market sector. So for us, the recovery in the tourism sector is certainly very important for this year.
And my last question, what should be the top priority of the government, in your opinion, to help tourism and to help Georgia to open up its economy, at least to the extent that it's possible with all regulations and all hygiene norms, of course, in place?
Well, of course, the vaccination rollout and the program itself is important. I mean, not just for Georgia, but also for the region as well. I think maybe moving a little bit beyond kind of post-COVID time, boosting medium-term growth, not just in the tourism sector, but just in general overall would be important for Georgia's economy, particularly, for example, continuing in structural reform. At the moment, Georgia is still under the IMF extended fund facility program. This very much underpins a timeline of structural reform that is important to help Georgia boost medium-term potential growth. Now, this program does expire in April this year, but we expect that the government will agree to another program in the future. So structural reforms focusing on perhaps improving human capital and also the business environment is important. So education and vocational training to improve labor force skills. I mean, Georgia has one of the highest ease of doing business indicators for the region, and also for amongst BB rated sovereigns. However, we could potentially have further enhancement to the business environment, say if they would have progress in strengthening the efficiency and also transparency in the judicial system, for example. The government has also spoken of privatization of state-owned enterprises. Although this would be a very challenging reform, it would certainly be important in improving business competitiveness, certainly if done effectively. Also, Georgia has benefited from many free trade agreements in recent years, but has yet to capitalize on such agreements to increase its share of goods exports. So focusing on capitalizing on these trade agreements would also be beneficial to improve the external sector, and also investment in developing into higher value-added sectors would also be beneficial. I mean, there remains a lot of potential still for investment in existing sectors such as tourism and the transportation sector. So whilst it is important that we see the tourism sector pick up for this year, there are also other areas where the government can develop and improve investment in.
Yes, thank you so much, and thank you for your answers.
Okay, thank you very much for your time. Thank you.
We are BMG. Follow and subscribe for business and economics news.